The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We will have Norm Winsky on at the break from Astro Trend. He always has some great information for us, so we will look forward to seeing him. We started out the show today by posting in the two charts we were looking at yesterday regarding the wheat. As you can see, that butterfly pattern that formed worked rather well. It's moved well over 13 cents to the upside, so you certainly, if you happen to buy that trade, you had your first profit objective be reached at 10 cents, and now you would put your stop, use a trailing stop of 10 cents, something like that, or keep your stop at break even, make it a relatively risk-free trade. But remember, all these are just patterns, folks. They sometimes they work, sometimes they don't. You know, it's just a matter of using probabilities. That's really all you can ever do. So keep that in mind. That's the important thing to to really watch. When you're looking at some of these things, because it makes them very, very predictable when you're looking at it. And if you remember yesterday, we were talking about the the E-mini S&P, with the Dow being down 7 days in a row. It was due for a rally, and what we were expecting was the market to rally up to about the 2163 level in the market for that, because the reason why that would be a really nice Gartley pattern, and it would also be a spot where you would have your you would have a beautiful pattern where you had a 61% retracement exactly, at the ABCD level, and that makes that a Gartley. And that's what we've done so far this morning, is we've gotten exactly up to that level. I'll post it in here so you can take a look at it. So it's already moved 5 handles, to the downside, down to around the 2158 level. So as long as we don't get above 2164 today, we would assume that this is just nothing more than a 2-day rally after we made the major top up there at that new moon that gave us a $35 break to the downside, stopped right at the expansion number of reciprocal of root 2, 1.414, and that's what's holding it up. Okay, the big news last night, boys and girls, was the British pound. The Bank of England came up and said that they are going to cut rates for the first time since 2009. Where have they been? They must be on a different planet. I mean, everybody's dropping rates to zero, but the Brits have actually held up relatively well. Now, the chart that I'm going to show you is the chart showing you the British pound over the last month or so. After we made that bottom down at 128, we rallied up to that 135 level. Then we completed the Gartley pattern just on yesterday, as a matter of fact. And it was in a bearish mode, and then, of course, this pushed it out. What you're seeing here is what I was expecting as a potential range if there was something really crazy happening with the British pound, like they had not done any quantitative easing, which they did do, but it could have expanded all the way up to the 136 level, and then also come down all the way to the 129.50, which I still think is where we're going. 129.50 is what I'll be looking for in this market, which is down another 200 pips from where we are. We've already dropped 200 pips from the high yesterday, so there's a possibility, especially with this long-ranging bar here, that we'll be heading down to the 129.60 in the British pound. That will be another one that we want to be watching, because it's done just about everything that you could possibly ask for. Now, if you'll also recall, we were looking at the euro, because the euro had a really nice move to the upside. It completed a beautiful ABCD pattern, and we were looking for it to pull back to the 111.30 level, and the low last night was 111.28. We've rallied about 20 pips off that bottom, but that was a perfect 382 retracement of the low that we made back on July 27th, and it was also a 20-man line came in there from the highs of July the 5th and then July the 14th. So that did line that up. And being a 4-hour chart, it gives you some really good data to look at. As you'll notice that on the 2nd, which was the new moon, we hit that perfect 61% retracement, also making it a Gartley. That was at the 112.30 level, and then we dropped a little over almost exactly 100 pips into the 382. So as long as we stay above that 111.20 level, this market has a potential to go a little bit higher. And as we have seen in the U.S. dollar index, all of these things, sort of fit together, and it gives you an idea that you're in an area where you could have at least some really dramatic things happening. Now I'm going to post one off because we have only a few minutes today before Norm Winsky comes on, but I want to, since we were talking about wheat yesterday, and it started out really good, and corn did the same thing. Corn made the same type of butterfly pattern, but wheat was the easier pattern because of the perfect 3-drive pattern that we had to the downside. But let's take a quick look here at the November beans. Everybody's has given up on this market, and we've been waiting for this for quite some time. But if you look at these November beans, and this is a daily chart, and November beans are new crop beans, but take a look at it. You had the 135 pattern form perfectly during August, November, and March. That was as nice a pattern as you could possibly get. 3 higher bottoms all coming in right near the 78% retracement. Then we have the big explosive move where it rallied $3 a bushel from March to June. And then since that time, we've been in a very orderly trend down with ABCD patterns all the way down. And as you can see, we're only a few cents away. We're only about 14 cents away in the November bean contract from making a 78% retracement. Now, this is very important because if you look at that first retracement, which was right at 50%, the market rallied almost $2 a bushel, well, $1.50 a bushel after that 50% retracement. And here it didn't do anything at the 61. It went through that one. But now we're at the 78% retracement. Plus, we also have a 1.618 expansion over the last 2 weeks. It also comes in at this 940 a bushel level. So and that also is very, very near the high that we made back in December. So there's a lot of things to look at here in the November beans. And I know there's quite a few people in the Tiger Den that actually trade beans, so watch it very closely. It's going to be real interesting to watch, and we'll be watching it here, so we'll watch it. One other announcement is I will be off next week. I'm actually going to take a vacation, so I will not be here next week, but I'll be doing my own trading, of course. But the main thing is that I will take a little vacation, and then I'll be back the following week.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I posted a 60-minute chart of the silver over the last week, and as you can see, this morning's rally's taken us up to the 61% retracement. Gold, however, has gone above the 78% retracement back into what we think is pretty strong resistance at this 1370 level, but we certainly could be wrong. The platinum, on the other hand, has only made a 38% retracement of the move down that we had on August the 2nd. So the gold market is very, very volatile, as we always expect. So if you happen to be in this, make sure that you use protection, because this thing could really go quite a bit, and you just don't want to stay in front of it. One of our listeners has asked me to comment on Tesla, and I really don't have a chart on Tesla. I just happened to see one yesterday after the earnings came out, which were a little negative, but the stock is still holding up. It just had its 13 consecutive quarters of negative results. In other words, they've lost money all during that time. So hopefully that Mr. Elon Musk will be able to put that thing together. I always wondered how he was able to use the brand name of Tesla. Certainly the Tesla Foundation or the Tesla heirs still have the rights to that, but that I don't know. But that is certainly a very, very famous name. He was certainly one of the more brilliant minds ever to walk on our planet, for sure. Anyway, that's what we're watching with Tesla. Not really much is happening. We will have Norm Winsky on here in about 10 minutes. So what I want to do is just to bring out a couple other charts that we're looking at. If you'll remember, we were talking about the euro earlier, and I wanted to, just to point out to the fact that hold just 1 second, please. I have to do this with the dollar index first, and then I think we'll be all right, and we'll be able to see it. So give me 1 second here to get the dollar index up, and we'll be able to see if we're going to do it. Son of a gun, I can't get the dollar index. There we go. Just takes a little bit of time. I've got these categorized now, but it just takes me a little while to pull them up. Okay. You don't have to. I'm not sure. I do owe Tom O'Brien a boat ride, and I tell you the last one that we had, which was back about 5-6 years ago. We were in that inland canal. Going to a restaurant, and there were about 6 or 7 of us on the boat, and I swear to God, it was a full moon, folks, and the waves, you wouldn't believe, there are 4 and 5 foot waves cresting over the front of that boat as we went down the canal. I mean, it was amazing. It was like a giant tropical storm. The waves were so much, and by the time I got to the restaurant, I had such seasickness that I was not able to eat. But fortunately, I shook that off after a couple of cocktails, and I was able to make it through. I did take a taxi home because I was afraid of the rest of it, the boat maybe sinking in that canal as we were going. I just don't like boats, never have, still don't like them, but that's neither here nor there. Okay, let's take a quick look here at the banking index. This is something that's very important because we've got a situation where all of these banks have been making money with virtually no interest rates. They don't have to pay any, but they certainly charge you. I mean, they haven't cut back anything with the with the interest rates that we've had as far as credit cards or automobiles have cut back quite a bit because you can get almost zero interest for your autos. But if you'll notice here, since 2007, we've been in a pretty bear market. We've had a bull market since 2009. That stopped exactly at the 61% retracement of the high on 2007, and then you see we came down into January where we had a little bit of a bounce, and we've made lower highs now for the past year in the banking index. So that in itself is another warning sign that we could be looking at something a little bit more serious in some of these things as far as what we're looking at for interest rates. It looks like from just looking at the charts, it certainly appears, that we have been able to make some type of a major top here in the bonds. Pay attention to, we're very, very close to a 61% retracement of this past move down. As you recall, the chart that we're looking at now, we hit that 174 level, and then we came down to the 171.04 level, which was the 78% retracement from the low that we made on the 19th, on the 20th. And now what we're doing is we're rallying right back into the 61% retracement at 173.16. So if you're a bond trader, keep an eye on that 173.16. That looks like a real interesting spot for a potential short sale. You don't necessarily have to sell it there. You could actually watch it for a little bit, and as long as it doesn't get above there, that gives you a place to as John Logan says, put on defense. And because if you sell it at 173.16, you don't have to risk more than I think just 20 ticks on that, which is $600. That would be the maximum that you would look at, and your profit objective on that would certainly be more than one full handle, which is $1,000. So those are the ones that you're starting to watch, and we'll see what will happen as we go through this. I wanted to show you the importance of the low that we made yesterday in the NASDAQ, because folks, it was spot on. 61% retracement, and what we've done so far since this chart was done is we've gone up and we've made a perfect ABCD retracement, the 61% retracement up around the 47.35 level. So this also is making a bearish Gartley, much like we're seeing in the S&P 500. So they're falling in line. The question is this just a 2-day rally, or is this just going to be something that is going to be a little bit different? As we take a look at this NASDAQ with the updated charts through this morning, you'll notice that we got up to 47.35, and we've already backed off about 15 handles from that. So the 61% retracement stopped it on the downside. spot on August the 2nd, and then August the 4th today, you can see that we are actually bounced up against the 61% retracement. So it's bouncing between those, and that usually means you're going to be into a trading range, and we should make an ABCD to the downside, which would take you about 70 handles lower if it's going to do that, but that remains to be seen. So those are the patterns that I think have the most importance of any of the things that we're watching this morning. And we'll be having Norm Winski on in just a little bit. Remember, folks, the euro, and I love trading the euro. It's probably the easiest thing to trade of anything that we have. As long as we stay above 111.20, this certainly has a possibility, to be a pretty good bounce in this level, because the dollar index, which is 53% weighted by the euro, is just having a minor bounce also. So that's exactly what you'd like to see. Whether that continues that way or not, remains to be seen. But that's what we're watching right now. 877-927-6648. Stay tuned for Norm Winski Astro Trend.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Norm Winski from Astro Trend on the line. Norm, are you there?
Yes, sir. Good morning, Larry.
Top of the morning to you, folks. This is the only man who sleeps less than I do. Norm, we are showing the chart of silver. Do you want to start with that one?
Yes, sir. Well, we're just going to do a real quick recap of when I was last on your show. I was on your show last on July 7th. That was a Thursday, in anticipation of a big planetary setup for the weekend into Monday the 11th. And I think I talked about 4 markets, so we'll go through those real quick. Then we're talking about July 8th to the 11th. There's a silver I mentioned, and so here's what happened. Here's if you can see that chart, okay, Larry?
Perfect. Yes, we have it
Yes,
on.
sir. So we got that was a little pullback low there, 1 day low. Then it rallied up on Monday the 11th. That was Friday the 8th, Monday the 11th. We made a nice high there, retesting the what was that? July 5 high, and then we were down for about 3 weeks. Okay, so that was not a bad turn there, right?
It was very good, yeah. And like this is like the restaurant business. You're only as good as your last meal.
All right. Well, let's go to the next buffet now, or whatever. And so here's your beans.
We can do that.
You were just talking about the beans here a little while ago. So here's your beans.
Yep.
July the 8th July 8th. We pulled back. That was a nice low there. I was on the show there. I might mention on the chart. 1020 level was a support level, and we actually made our low on the 8th the next day at 1021. So I was off a little bit by a penny, and then we rallied till. What's that?
Norm, I have a question right now. One of the folks in the den has asked, because we were talking about beans earlier in the show, that we have a lot of support, about 15 cents lower than we're trading right now. We're about 9.55, and around 9.40 we have some of the key ratios coming together and some patterns coming together. Do you see anything in the next few days, either like today or tomorrow, possibly Monday, that could possibly a good turning date in the soybeans?
Yes, and I'm going to talk about that in just a few minutes, okay?
Well, I'll just shut up and let you talk about it then. How's that?
All right. So anyway, I just wanted to finish there. So anyway, we had a nice rally from the 8th to the 14th. We rallied all the way to, as you're familiar with the chart there, 1123. If you were lucky enough to get in there near the low, you had potential of $5,100. Okay, moving on ahead. On one
now
contract,
we're going to be in the S&P
that?
now? We'll be in stocks now.
Yep, now we're going to talk about S&P. Here we have here's the lesson here in the S&P, in that we were up against this resistance line here when I went on your show. That was right here on the 7th. I said we were up against this resistance line here, and we had the May 2015 top at 21.37 on the S&P, and that had held for almost 14 months. I'd say we were in a big planetary window here for a possible change in trend. Most of the time, 78% of the time, that usually would mean a change in direction. As you know, Larry, every now and then, though, 10 to 15% of the time, you get a breakout acceleration, and that's what we got here back on the from the Friday to the Monday the 11th. So that was another important time forecasted by the planets. We took out a 14-month high. Here's the T-bonds. You just talked about those a few minutes ago. Here I had again the same window, and I talked about that. This is very interesting. This is anybody studying chart patterns. This is a classic right out of the textbook. You got your rising wedge here, and I said the chart pattern looked like it couldn't go much past around 177 area, and this thing was sort of a terminal-looking pattern. And we actually got here's your data box here. It shows that on the 11th, Monday the 11th, we got to 177.11. So it was off, I said the 177 area. So that's not too bad.
That's very good.
Yeah, and so that's where we were at on that. And now we're going to go talk about what's happening now.
This is where you get the big bucks, Norm, so fire away.
All righty, great. So it's tonight. I got to get my days straight here. Today is the 4th, so tonight we got Mercury doing big stuff here. It's there's a cycle involving Mercury and the latitude cycle. That's as Mercury goes around the sun, as the different planets go around the sun. They are 3-dimensional, so they don't just stay in one plane. they tend to go up and down as they go around. And so kind of like a carousel, the horses go up and down as they go around. And so every now and then they hit the 0 point. We're right at the middle there. And Mercury's going to do that tonight. That's been a big point for the stock market in the past. If we go back and look, we had 2 0 latitude points in June. One was within 2 days of the high in June. And then the Mercury, I think Mercury was at 0 north latitude on the 27th of June. That was the low of the Brexit panic, That was a Monday, and that was the low, and then we rallied over pretty much ever since then, right? It's been up and away. So, and Mercury is also key to grains. You were talking about the grains. Notice that I have soybeans in big all cap letters to emphasize beans, and I have stocks, and then we also have the corn, oat, and wheat. So to now that may answer your question. I have a big window here starting tomorrow for soybeans and also possibly the stocks in these other markets I mentioned too. Over the weekend, we have a big window for cocoa, coffee, hogs, oats, soybeans, stocks, and T-bonds. Okay. And also, go ahead, Larry.
No, that's pretty good. One of the questions that we've had just come up is when you're talking about Mercury, the gentleman asked, that Einstein's work with, his theory of equal MC squared was based on, Mercury, the fact that space bends or what. I don't understand it, but Andy, you're very well read, Norm, but have you ever done anything with the astrological stuff that Einstein looked at? Because I know he was really infatuated with the planet Mercury. I remember watching a documentary about that once, and he was certainly interested in that particular planet.
I've not read anything about Einstein's interest in astrology. I know Newton was an astrologer, and many of the great earlier scientists were. Kepler and Newton and Galileo. Those guys were all astrologers,
And of course, Winsky.
Well, I don't know if I'd mention my name with those guys, but
No, I don't think many people can walk in those shoes. That's for sure.
There you go. Those are big shoes. I got little feet.
Yeah.
There you go. So anyway, so there we go. So that's why I asked to come on your show now, Larry, because we got a big window coming up here over the next several days for some big change in trend points for several of these markets. So yep, and coming up. Let's see, coming up here, we have, coming up, taking a peek ahead here, we have, one of my favorite things, Larry, is the station points. And that's when a planet turns direct or retrograde, for those who are new to this. That's because we're living here on Earth, as you mentioned, Einstein, Mr. Relativity, said everything is relative. So we're here on Earth, so everything is relative to our position.
Okay, we got to take a break, Norm. Stay with us and we'll finish up here, okay?
Yep.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber
as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back with Norm Winsky of AstroTrend, and you were talking to us about station points, and one of the folks in the den has asked a question. You were on back in July, and you talked about your Bradley model and how it was weighted because of the retrograde motion of some of the planets, and I know you made a big thing about Uranus going retrograde. Can you tell us how that effect might work here in the coming few weeks or months?
Sure. Let me just give you a little background for anybody who's new, if that's okay. So what is a station point? A station point is due to our relative position here on Earth. It's like if you're driving your car and you're doing 60, and if somebody passes you doing 70 and you happen to glance out your side window, even though intellectually you know that you're doing 60, you might get the impression that you're actually going backwards by 10 miles an hour. Okay, so I'm sure most people have had that experience. Einstein talked about, speaking of Einstein, Einstein told a story about sitting on a train in a train station where there's several trains. His train is sitting stationary, sitting still, and the train next to him pulls out of the station. Even though intellectually he knows that he's not moving, he looks out his window and has a sensation that he's going backwards. So that's what a station point is. If you were to go out and plot the planets in the night sky, you would notice that occasionally, individually, the planets look like they stop their motion and then reverse direction when they stop their motion. That's called a station point. There's two kinds of station points. One is stationary direct. That's when it stops to go forward. And stationary retrograde. That's when it stops to go backward. So now we have, I think I've had a major advancement in forecasting the markets, and that I've noticed that these station points often will invert the polarity of the planetary energy, so that what would normally, according to traditional astrological rules, would dictate the market going in one direction can all of a sudden flip. As you know, anybody's dealt with the Bradley model and similar models have to deal with the inversions, and I think I've gotten to where I'd be able to forecast a high percentage of these inversions. A big factor in that, I believe, is station points. I'm also working on some other factors that might also predict these, but one of my biggest factors is the station points. We have one coming, and by the way, these work probably 75-80% of the time, and so they usually give you an important change of trend, and it usually occurs within one trading day, the high or the low of the month. And so that's some pretty nice information. And so here we have coming up next Friday, the weekend, not this weekend, but the following weekend, the weekend of the 12th, we have Saturn is going to turn direct. And so that's a high confidence factor for the stocks, coffee, and coffee is, well, Saturn is the planetary ruler for coffee. and it's in Sagittarius, so that's oats. And then stock market is the big basket of everything. So if the plants are doing anything important, the stock market will be involved. So there you go. So and then did that answer the question, Larry?
Yeah, it did, but repeat that date again in August, please.
We got it coming up the week over the weekend of the 12th, Friday the 12th, over that weekend.
So it's a week, be a week
Yeah.
from this coming Monday.
Right. If you see AC on my dates here, that means after the close. So that's after Friday's close. Actually, I think occurs on Saturday the 13th.
Okay.
Okay. And then we also want to talk about a little later into the month. We're getting into the eclipse season. I know you love the eclipses, Larry. We've had some exciting. Usually, you get a 1 to 2 day wild whipsaw, and so usually a big drop. The stock market does not like lunar eclipses. Will probably be one of the most dramatic examples in the past year was we had a super lunar eclipse on over the weekend. It was on Sunday, the September 27th of 2015, and the market was everything looked fine as we went into the weekend. On Friday, I think the market closed higher, and then we came in and we had the super lunar eclipse is where you have the so-called supermoon. That's when the apogee perigee lines up with the full moon, and this one occurs every 20 years. And so we had all these about 3 or 4 different lunar cycles all lining up together. And so we had that happen on Sunday night, the 27th. We came in on Monday morning, and the Dow gapped down 300 points. So that was a wake-up call up for some people. And that got you awake in the morning, huh? Down
That's
300
for sure.
points.
And that is August the 17th that we'll be looking at that lunar
August the
eclipse.
17th, not a super lunar eclipse. Those only occur about every 20 years, but we do have a lunar eclipse coming. These do average. I researched these long ago, back in the 80s or whatever, and went back, decades, and found that on average, the Dow Jones, for example, tends to drop about 1.5–1.75%, somewhere in that ballpark. And it works about 75% of the time, and we do have a lunar eclipse overnight after the close of the August 17th. So you want to pay attention to that. Okay. We have let's look at some charts real quick. We have the S&P 500. We're right now as you know, we've broken the sharp uptrend that we had in the first part of July, and now we're kind of in this trading range here. My sort of Bradley style model, it's my own model, but basically indicates overall that we're probably going to be kind of caught in a trading range here for most of August, and we're just going to kind of whipsaw back and forth. Though, if you're on top of this, the whipsaws can, you can make some money on those. So, you don't have to have a big trend one way or the other to make money. Sometimes the trading ranges are just as much fun or sometimes easier, than a big move,
That's for sure.
All right, next now let's talk. I'm always amazed, Larry, how many times when I come on your show, you're talking about the same markets that I am, and I think we're looking at these markets from two totally different perspectives, different sources of information.
Well, you
So
certainly look at it from the astrological, and I'm just looking, at the bar charts or the candlesticks, looking for patterns. So it is really amazing. Of course, we do watch the same things a lot, so maybe that's not much of a coincidence after all. I'm not sure.
Okay. Anyway, so we got a big window coming up here over the weekend, and the stock market, we looked at that. Now let's look at the bonds. And to me, it look like they're trying to trade into kind of a wedge or triangle formation here, where you have the lower tops and you have the rising bottoms here. So this is definitely going to come to some kind of inflection point here pretty soon.
Yeah, we're only about 2 ticks away from the number we were looking at when we were talking about them this morning at 173.16. I think we've been to 173.13. So that's going to be an interesting number to watch as we get to that point. We're going to have a break here, I believe, in just a second. And what we'll do is let's chat for just a minute. And what I'll do at the end, I'd like to give you a couple of minutes to go over the services that you have. I'm going to post your thing, because I know you have a lot of free things that come with a money-back guarantee, which is highly unusual in our business and greatly appreciated. But we'll do that as we come in to the break. So we'll give you some time to let the folks know where where they can get in touch with you. Because Norm, you've been coming on our show since May 19th, which was the high back in the stock market when we had the new moon and Mercury retrograde that day that people still talk about. And many of your calls have been absolutely spot on. So we want to congratulate you and also thank you for being a regular guest. And anytime you'd like to come on, just Skype me or drop me an email, and because the things that you have for timing certainly need to be watched, because even the ones that haven't worked have not been very much at all. We're going to take a break, and then we'll let you talk about what you have to offer, okay?
Okay, thank you.
Stay with us.
Yes, sir.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. And Norm, I've posted your contact details into the Tiger Den so the folks can take a look at it. But we have a lot of listeners, of course, that are not looking at that. So why don't you give us a little review of what you offer and how they can reach you?
Okay, before I do that, I'll do this in 30 seconds if I have a minute. It's just the charts, the markets on their best with the planetary lineups are where you get an extreme, where a market is extremely oversold, overbought, where it's been going up, 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 or down, down, down. Here we have hogs. Take a look at hogs. We get one more drive down into the weekend with the planets lining up. I think that you might have a setup there for a nice buy on the hogs. And then I'm sure you're going to like this, Larry. Here's your soybeans. Same kind of deal. Actually, the hogs and the beans have similar chart patterns where it's been going down, down, down since for quite a while here. And so they're getting oversold. So I look for those as a possible low here in the beans. Looking ahead now, how to get the free stuff. Here's so I got about 40 years experience. I'm a former Chicago floor trader. Been studying this stuff just about all my adult life, and so you can get my letter for free if you can just contact me. I have individual classes, so it's important that you contact me as soon as possible because I have a small window each month where I have a few days where I can help folks. I get them the letter, and there's a class that goes with that because you have to, but to say the least, my letter is rather unorthodox, so you have to learn how to read the letter, and I have tables and charts in there, and then I have to explain how you read those. Once you read those, it's all on a 5th grade level. If you got out of grade school, you can do my stuff. You just have to learn some new jargon, new terminology. That's the word I'm looking for, terminology. And once you learn that, you're good to go. So you get to learn some astro, some fractals, some advanced Fibonacci, I don't know, Lucas numbers, that sort of thing, all kinds of the forecasting models, and to learn from my 40 plus years of experience in the markets. And you get all that for free. Just contact me, and you can call me on my landline. I'm here in sunny Florida. I guess you're coming here soon, Larry, at 239-594-3939. You can Skype me at norm.winsky right there. And there's my email, nwinsky@embarkmail.com.
Norm, thanks for joining us, my friend, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.